Yes.
In that search, can you control the radius?
Yep.
Okay.
Absolutely. You can
So
change.
then if you had bad neighborhood or different neighborhood, you could account for that.
Right, but the point that I'm trying to make is, like, if you know, these are around East Knoxville, down below the freeway, up above the freeway is going to be better on rent. You'll know that just by living here, but you can click on each of these and say, do I put that into my totals, do I not, when I'm trying to estimate a rent for something. So that pretty much covers the first part, figuring out what it is for rent. And asking people what they pay for rent is always a horrible idea, because landlords are generally bad property owners. They set it and forget it, or they don't hire a property manager, they don't raise rent when they can because they're afraid of losing a tenant. I buy properties all the time. I just bought a duplex. We're paying $600 a month rent each. 2 bedroom, 1 bath in Knoxville. I'm going to charge $1,400 each side once I'm done remodeling it. And their reasoning was, well, they just always paid on time and they never gave me any trouble. So yeah, never that. I hear it all the time as an agent, like, oh, how much do people are paying in rent? It doesn't matter how much they're paying in rent. It matters how much you can get when you acquire the property. Secondarily, I want to talk a little bit about value. When you're buying a rental property, value is always key. Generally, cash flow is your number one goal, because you're holding it in a rental. You're probably holding it long term, so cash flow is the number one goal. But you have to figure out, obviously, the price you pay versus the financing you're doing and whatnot. So, what's the best way to figure out market value of a property? We'll just say, assuming a property that's in B+ condition, that doesn't need a lot of work, that can just be a retail price property. What's the best way? Looking for comps, just your own research. Realtor, yes. Don't be afraid of realtors, and I know I are one, and I say that. But a lot of investors are really afraid to work with realtors because they're like, oh, all they ever do is add to the price. And that can be true, but realtors also have instant access to things. They generally will have information on properties before you will have, and they also work with more sales than you would on your own personally, unless you're just a really, really heavy investor. So don't be afraid of realtors. For my own research, I found the best way is by sending myself little filters, and you can do it on your own on any of the popular websites out there, but the realtor can do it a lot easier for you. And that's how I do my research, is all day, every day, but it's at 30 seconds at a time. So I email myself every multifamily property in the Knoxville metro area that comes to me. Well, there's not that many. It comes out to 2 or 3 a day. But that education right there of seeing what it got listed for and then what it got sold for, and I'm constantly seeing that every day. When a property pulls up, then I instinctively know the value for that area because I've been doing it. And that only will take you 30 to 60 days of doing that, and it's just little bits throughout the day. Some people have it set it where it all comes in the morning, and then the next we go to the next day. That's fine too. I see them as they go because I want to be standing in the property 30 minutes after it's listed, if I'm intending to buy it. But really, better than asking your realtor is getting your realtor to set you up on a filter that will send you that information in real time. And it really doesn't take that long to look at and evaluate. You click on it, you look at the pictures, you see, does that look reasonable, does it not? And then have them set it up to when they close, that you get that same email. Oh, this one was listed for $550 and it closed for $510. Huh, why did they take $510? Just those data points, when you're getting all those little course corrections throughout the time, then you're really educating yourself in a better way. I have found, and I've done this for probably 10 years, I found that better educates me than talking to any realtor out there. And realtors can be a wealth of knowledge, but the data is what you're really after. And then, in the end, you're also, as you do more, you're going to rely on your own experience of, oh, I bought one down the street and I know what it sold for. So I bought it 2 months ago, so then I know I can jump on this one right away from there. After that, after you've got your, just really being rudimentary here, you've got your rent, you've got what you think the property is worth, then it's all about calculations from there. So there's lots of different places you can get online for evaluators. I just pulled up a simple one here, you know, rental property cash flow analysis. So let's say in this particular instance, you got $1,700 in rent. I always pay a property manager and they charge about 10%, so I figure that in. You got your taxes, you got your insurance, these are monthly numbers. I think that's probably a little high for this area. You've got, it just auto calculates everything and you change whatever you want. So this is a really great tool to play around with. You can get as complicated as you want down here, but when you're looking at your price, your evaluation, it tells you what can I offer to make the amount of money that I want to make on it, or the amount of money that I should be making on it. A lot of guys will advise you cash on cash return, cap rate, things like that. I don't think that way. I think in dollars, because that's the way most Americans think, is in dollars. How many dollars am I paying out? How many dollars do I have coming in? But this, you can find. I just pulled this one up for free, but just a rudimentary way to get it done quick. And when I first started evaluating investments, when I would get those emails that came in, I would do this exercise just 3 a day. I would pull in 3, I'd take the numbers that are on there, what they're trying to sell it for, the down payment that I could put in. I would talk to a lender, find out how much they could finance me for, and within 2 weeks, I could just knee-jerk know whether I should make an offer on a property. But it's because I practiced, it's because I did it.
What do you look to make on a rental?
Depends on what type of rental, but my goal is a bare minimum. I need to make $300 cash flow on it a month. Otherwise, it's too risky, in my opinion. The ultimate goal of a rental, to me, is not in the short term. It really isn't. Real estate doubles every 10 to 15 years in this country. It has for the 100 years that we've tracked it. That's what I want. I want to buy something by putting down only 20 cents on the dollar or 25 cents on the dollar, but having my 100% double in 10 to 15 years. And if you really think about it that way, there's no better investment than real estate, because it's the most highly leverageable investment that you have, and it still has a real product to come back to, unlike Nvidia when it drops, or Apple stock, or gold, or whatever. Well, gold, I guess, is still a good example because you still have the gold. But everybody, with all the tax advantages you have, the depreciation, the appreciation, the people paying you to live there, and the cash flow, there just really isn't anything better than a rental property. And I know a lot of people like to flip. It's great. I do it too. All a rental is a long-term flip. That's all it is. With tax advantages that you won't get on a flip, and eventually you can take that cash, put it out, buy something bigger, and kick those taxes down the road, and then eventually you can still pull all that money back out in a loan and never pay tax on it, will it to your kids. So once I really understood all of the advantages, and I've been selling thousands of properties to people and lots of investors, but when I really understood the advantages of rental properties, I pretty much stopped flipping. The only way I flip now is if I don't do any work. If I just got it at such a good deal, and I sell it a week later with no work. Because that, to me, the time value of that money is better than doing the work to hold it. To change on to something else.
Did you make the sheet, or did you pull this one?
No, I just pulled this. I literally Googled this in 5 seconds. And there's a lot of good ones. I tried to find one that was more simplistic, because there's ones that will be this long. You can get as nerdy as you want on it. But this is a very simple one to start out with, and I don't get any more complex than this. This is from Vertex 42. I know Bigger Pockets has their own that you can pay for. There's all kind of different software out there. The nuts and bolts of it, though, you really just need to know what's my rent, what are my expenses, including taxes, principal, interest, and your property manager. And then you can see if the cash flow works. If not, you play with the numbers and say, okay, well, if it doesn't work at 7.25, what interest rate do I need to get to make it work? Or is that a factor that I can change up or down? Maybe, maybe not. Can I get a better loan? Can I put more money down to establish the cash flow that I want? But it's really, you got just the different dials on it to figure figure out whether it's a good investment or not for your particular goals. Lastly, I just want to talk a little bit about you know, how do you finance a deal? What are the possibilities of doing that? So, what's the ideas out there? What's the best way to finance a deal?
Conventional loan.
Conventional loan, okay. What's the pitfall of using a conventional loan?
You have to qualify.
You have to qualify. Home needs to be in decent condition, right? You can only have so many. Untrue, but residential conventional loans, true. There's limits on what the lenders will do. If you get into a commercial conventional loan for residential property, you can keep going on into oblivion.
Would it still be fixed?
Yep.
Or is it not?
There are options for fixed 30-year commercial loans on residential rental properties, either conglomerated together or singly. The only disadvantage to them is they'll have a prepay, a step down, 5, 4, 3, 2, 1, step down, or a 3, 2, 1. And because they're commercial, you can buy in your LLC. You don't have to change it later, and they do not show up on your credit report. So it doesn't hurt you from qualifying for your residential loans. And you can do those from single to 4-unit properties. So if you need a resource for that, I have one.
Yes, I would like that resource.
He's been very easy to work with too, by the way.
Okay.
It's been Alex, yeah.
Oh yeah, that's right. Alex has been good for you.
Yep.
Okay.
Been good for me.
Awesome. The only disadvantage you'll have is he's